Alright, welcome back then guys. I'm gonna go over this Thursday trade really quick. It was terrible, but did end up making $200 on the day. And I'll go with this intuitive sense, I guess. Just gonna be really quick with it as well. I just finished the journal entry for this. It was very long. I didn't really go over all of these, which were terrible, I'll be real. But it was like if any beginner or intermediate term trader traded on this day, it for them would have really blown their account. It's really hard to manage risk in these environments. It's very hard to manage trade in these environments, etc. Friday I didn't trade because I just knew it was going to be terrible. But um, NYM low, whenever they do this, they leave the NYM low. You don't even need a bias. It's just going to go for it. All right. And usually what I've recognized, it would usually go for it straight away at 2:30. If it doesn't do that, it will do it at the 2:50 or 3 p.m. Is and I'm saying this in the UK time. Let me say that again. If it does go for the NYM low at 1:30, which is 8:30 for the NYM, 2:30 being 9:30, and 10 o'clock being 3 p.m. So like just go with that basis. I'm a UK trader and I US. But anyways, you can see the trades taken here are terrible, literally terrible. All right, they're not good setups because I'm trading within the range, and it's just ugly. I like to trade the either the top of the ranges or the OTE of the ranges. That's it, simple as that. Or 50%, which is right here. This is 50%. Okay, but usually when I catch trades, I'm usually catching the very high of them. The main thing that happened on this day was I got impulsive, didn't I? And thingy I traded a bit more like a retail trader would or a gambler would, and I didn't like it. I didn't do high risk though. My risk was like really low on these trades. Like either max was probably $70. That's it. But on this trade, it did extend to uh, this high, which was $130. But then I quickly went break even. I didn't like that either. I already journaled down. I know I'm not gonna do that stuff again or whatever. It's just stupid. And pretty much yeah. But let's get into the trade itself and why I took it. This one is really obvious, like just super obvious. It came into the PD array. At the time, I wasn't actually at my computer, so I took it to my phone. But if I was at my computer, I would have literally taken it right here. That's it, simple as that. And if I didn't take it there, I missed it out, wherever, I've just done this. Boom, hits 50% or hits the optimal trade entry, either one. If I don't like that one, I could just enter right here, 50% right here. Usually I like to enter right there. But I probably would have taken it right here, to be honest. Like it comes under here, then I probably would have just entered here. Let's stop right here. And I would have gotten a nice, easy 2R. And I probably would have tried to hold it to NYM low. Of course, it is a give it, but I would have partialed a good amount from this if I was at the screen. And I probably would have locked in that $200 for that day and been done, or trailed my stop somewhere, wherever. Again, optimal trade entry, why? Because we get a first SSD, which is here, second SSD is here. Now, looking back at this is actually not the second SSD. This, um, well, say, this is the second SSD right here. Um, I'm thinking, isn't it? Yeah, that's the second SSD. But you can see this range is not really that great because we have an intermediate term low, like this low here. When we did come below, it was a sweep more or less. It's still a valid trade in there and still allowed to be taken. I do take the optimal trade entry of this, which is from this high to this low. Now, the really terrible mistake I made here was this actually does hit 2R right here, and that dot, so I entered right here. Stop would be right here, and then this does hit 2R. And the thing is, I actually go break even on this trade. Just do that. So I actually end up going break even on this trade right around here, but it hits 2R before that. No, sorry, I got break even at 239, as I remember, 239, which is right here, right? But it goes, hits 2R before that, and I've already adjusted my take profit here. Or if I just, if I just held it till 2R right here, it would have been a nice easy $150 on the day. And well, whenever that happens, just hold and we don't take our profit at 2R like we should have. The model says that, or the rules say that, wherever in it. Whenever that happens, it leads to us like chasing more than we should. And that's what I do here and here and here. And it's not great, I'll be real. I don't like that. Okay, so sometimes you subconsciously break our rules or whatever it may be, and I don't know why that is. I've already identified why. I'm not gonna explain why, but yeah. So why do I enter the here? This was actually a really good setup, to be honest. But and I actually do risk $60 on this. Let me see where I really entered this. So the main reason for entering this was go here. Start putting everything on this chart. So if we go over here, that's not 1 minute. 3 minute here. Let's try to do 3 minute this one. Let's try to do 3 second on this one. So yeah, right here. Okay. There is a SysD alignment right here. See, so you would want to be anticipating this to be the change state delivery. And then if you go on to the 1 minute here, you can already see that is change state delivery right here. So it makes sense to enter there. We did get a liquidity sweep, but it's not the most best liquidity sweep because we still got equal highs here and here. So it's not really the most optimal type of setup. I would also include that the first SysD here, it was a full first SysD because the consecutive up close actually starts all the way here, right there, very much. And even though it does close right here, it's just not that, like it doesn't look that good because even when you sweep this low right here, it doesn't shift it really hard. So it's not really a great setup, to be honest, to enter off of. Mainly because this versus the it's not a proper versus the, I would be real. It's more like just a short-term trend. It's probably like for the 30 second or something. Let me check. It probably is. And yeah, it is right. Yeah. So this is what the SysD would actually look like. These are the SysDs I prefer. And you can see it actually gives hit right here really nicely at 230. So they use this versus SysD to clear this sell side right here. Right, but they don't come to the 130 low, unfortunately. But they use this SysD to actually clear the sell side. And this is what I mean. Sometimes that first SysD holds, sometimes it doesn't. It also held right here very nicely. And this would be the actual proper optimal trade entry right here. So you use this high all the way to the bodies right there. You get the 0.705, and I don't know, it's more or less the same way I entered actually up here. And then it accumulates, comes lower, and then it doesn't take this high because it doesn't need to. It's an immediate high or it's a balanced price range. But you can see in the 1 minute that's not a first SysD. So what does that mean? It means if the higher time frame is not aligning with that 30 second, then likely this is aligning with the 15 second and the 5 second. The 1 minute is going to be buy side liquidity, and it is right. Yeah, so this is just buy side really. Now, when I did enter here, it did give alignment, and that $69 risk actually exceeded to $80, but didn't go to 120, which is what I was looking at. Well, actually, I was looking at the NYM low. That was the main draw, but I did extend it to $120 risk or $150 reward or whatever. Not risk, $150 reward. And yeah, I didn't really hit that. Just hit stop again. But then when it took this high right here, which is pre-session high, pre-market high, in any normal low resistance liquidity run market, it should really just take these lows at least. They do that. Whenever it does stuff like that, it's basically just higher resistance liquidity run. That's all it is really. And then moving higher right here, this no, sorry, this one here um, is a newbie mistake. Again, I need to really fix on this error. It's basically a breaker, but it's when you enter a little bit too early. And if you look here on the oh shit, oh, if you look here, right here, I actually entered there, but it should have really been there. Okay, so whenever it's close to a mean threshold like that, it's usually going to form some sort of breaker, and you really want to enter on the one above it, not there. So this would have been a much better entry. I do enter here though, and actually you get a nice win that recovers all of those losses. But mistakes from earlier, especially from not taking this 2R earlier, um, when you do that, it subconsciously thingy makes you think that um, getting a win here, for example, that's not part of your model, because this was a part of my model, for be real. This right here was in terms of this, like right here, 25294, which is right here. That's not part of my model at all. Nope. But this would be right here. So like, it's a funny thing in it with the subconscious is that when you take a win, say from here, and it's not part of your model, your subconscious registers that as a repeating phenomenon to happen over and over again. You can see here as well in 3 minute it had alignment, and in the 1 minute also had alignment. So this would be my model here. This would be the perfect good setup. It also has minor sell side here, and big ass phantom right there. But anyways, going back to the subconscious thing is when you do register a win, um, basically your subconscious is like it's going to get those wins again and again and again from that same process. But that's untrue, really. So that's what ended up leading to these and these and these. So, but this does end up paying a nice risk reward and actually scaling again here. I could have scaled in on the second CST, which would be right here from the optimal trade entry. That would be right there in the 1 minute. So we got this. But to be honest, with the way it was just acting, and it was like with the way it was acting right here, it was really bearish, showing that displacement. It was in the initial 50%. It refused to come to the initial 50%. You can see like it came to it here, but it refused to come to it here for the second CST. So whenever it does that, it usually just indicates it's really bearish. We also had the sell side right here. So I thought I might as well just anticipate that second CST right here. Partial right here, and then that actually recovered most of the losses, and then I got to put my stops at break even right there. Very, very, this is a really good trade, but if I just did enter here and I entered there instead, I probably would have closed here for a full take profit, I'll be real, or like there somewhere, whatever, for 3 hour take profit. So it's very important that you gotta like not take these, um, but you gotta take a setup that is your model, not someone else's model. If you take someone else's model more and more often, your subconscious will acclimate with that, and then it will take impulsive trades instead of taking your own trades. And that's ends up happening here, here, and here, which is marrying the bias pretty much more or less. And really, all this was doing was forming a what as a market maker sell model. Formed a market maker sell model here, and forms another one right here. And then around 350, it's very obvious around 350. It's that's usually the time they usually offset distribution whenever they have done it for like say they have it done in 330, or they've tried to do it, or they have it done in 230 or 250. Usually 90% of the time they do in 350, and they do end up doing it right here nicely. But problem is, like I was saying earlier, when your subconscious gets used to chasing someone else's model, I end up actually initially taking the shorts right here, but then I changed to longs. And see, you just make these dumb retail mistakes, really dumb newbie mistakes, I'd call them. But then when I see this happen, this is D, I'm like, okay, back to the original scenario, and yeah, end up catching higher the day. So today was not really much of a not today, sorry. This is a couple of days later, but this day in terms of $200, which was nice, and I ended the week green still, recovering some of this loss and adding to this profit right here. Even though this was a somewhat impulsive day, I think the main thing in it is just going over it, seeing why it happened, and so you can't repeat that same mistake again, really. And it was like another thing in it is because when you do make these impulsive decisions, one of the things I actually ended up doing on this day was the risk settings, which is right here. Um, so like the risk settings, I ended up actually changing them to, well, I remember I kept this at 205, but then I did this. I locked out the risk settings for this day. So whenever you lock out the risk settings, it doesn't let you change the personal daily profit target. And my initial risk reward that I was aiming for on this trade was, because I entered right, I entered like literally at the top of it, more or less. I entered around here. So the risk reward I was actually aiming for on this trade was the opening range gap C, which is right. Yeah, right there. It's basically at the end dog. It was in alignment with the end dog, so I just knew they were going to take that because the end dog was a taken. And that would have been a nice trial risk reward, or it calculated how much it would have made if I held it there, which would have been an extra $400. So yeah, crazy. You can see this was literally higher Thursday, proceeded into Friday. Friday did not offer a TGIF or any of that crap. Well, it wouldn't even offer it anyways, because if you look on the daily, pretty sure Wednesday, no, Wednesday, no, I should have offered it then, I should have offered it. Yeah, Wednesday did give a thingy, trace my day with a trending week. Yeah, realistically, it should have offered that TGIF. Check if it offered it or not. Wait. And it does offer, yeah, I can see it comes to 0.3% right there. So it kind of does offer it, I guess. But all in all, yeah, this was I wouldn't call it a terrible trading day. I mean, the risk was still managed and still made a win on this day, but it's just we can't justify these days as being correct at all. Because if you do justify these days as being correct, then you're just going to repeat the same mistakes over and over again. I'm going to leave it at that then, and till next time, be safe.